You've probably heard this phrase a lot lately, the AI bubble. Some people say we're in one. Some people say it's bigger than the dot-com bubble. Some say it's the next industrial revolution. So, which is it? And more importantly, what does bubble actually mean? Let's slow this down. Because every time a major technology explodes onto the scene, someone says the same thing. It's a bubble. They said it about railroads. They said it about electricity. They said it about the internet. And now they're saying it about AI. So what is a bubble? In simple terms, a bubble happens when prices rise way faster than the underlying fundamentals. Money floods in, excitement builds, expectations get unrealistic. Companies get valued not on what they're earning, but on what people hope they'll earn. And eventually, reality catches up. Prices correct, sometimes violently. That's a bubble popping. But here's the important distinction. When the dot-com bubble popped in the early 2000s, most internet stocks collapsed. But the internet didn't disappear. The infrastructure stayed. The fiber cables stayed. The servers stayed. And companies like Amazon survived. Google was born in that era. The speculation collapsed. The technology didn't. That difference matters. Why people think AI is a bubble? Let's be honest. There are signs. You've seen the stock charts. AI-related companies up hundreds of percent. Data center construction booming. Startups adding AI to their name and raising millions. Venture capital flowing everywhere. Some companies barely have revenue, but huge valuations because they're AI-powered. That's classic bubble behavior. When capital becomes easy and everyone wants exposure, discipline gets loose. And we've seen this before. The fear is this. What if expectations are too far ahead of actual profitability? What if companies are spending billions on AI infrastructure, but returns take longer than investors expect? Markets don't like waiting. But here's where it gets more nuanced. There's a difference between a stock bubble and a technology revolution. AI isn't just an app trend. It's being integrated into enterprise software, cybersecurity, drug discovery, manufacturing, finance, energy optimization. Entire workflows are changing. You've already seen companies replacing repetitive processes with AI agents. That doesn't just vanish because a stock corrects. If funding tightens, weaker startups will fail. That's normal. But the underlying tools, the models, the infrastructure, they don't unexist. So what would an AI pop actually look like? It probably wouldn't look like AI disappearing. It would look like this. Stock prices correcting 30%, 40%, maybe more. VC funding slowing. Hiring freezes in AI startups. Some overhyped companies shutting down. That would feel dramatic. Headlines would scream, but behind the scenes, data centers would still be running. Companies would still be automating tasks. Governments would still be investing. Because once productivity gains are proven, they don't reverse. Businesses don't voluntarily become less efficient. The real risk most people miss. The biggest risk isn't that AI goes away. It's that expectations were too fast. Markets price the future aggressively, but reality unfolds gradually. Maybe AI transformation takes 10 to 15 years instead of 3. That gap between expectation and timeline is where bubbles form and where corrections happen. So, is AI a bubble? Parts of it? Probably. Anytime trillions of dollars flow into one theme, speculation gets stretched. But is AI itself fake? No. The productivity shift is real. The infrastructure build-out is real. The enterprise adoption is real. The question isn't whether AI exists. The question is whether markets have priced perfection. History tells us something interesting. Bubbles often overestimate short-term impact and underestimate long-term transformation. The internet was overhyped in 1999, but it was also underestimated. That's the paradox. Closing thought. If there is an AI bubble, it won't pop the way people think. It won't erase AI. It would reset expectations. And after the noise clears, the strongest companies, the real use cases, and the infrastructure layer will still be standing. That's usually how technological revolutions play out. And we're still very early. That's my take. Let me know what you think.